Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so I was intrigued by a headline in the Wall Street Journal. We have a problem in this country. I'm not going to get political, but it's a problem with journalism and headlines and clickbaity stuff, okay? I'm going to show you first the headline. This was the Wall Street Journal. You can go Google the name and you could read it. It's behind a paywall. I was able to subvert the paywall with a technique from ChatGPT taught me. Housing is turning out to be a lousy shelter for investors. It's lousy. It's terrible. Housing is a lousy shelter for investors. It's turning out to be lousy. Before I read the first comment, what is your overall take on housing as a investor tool? Like, what are some of the benefits of like rental? Just call them rental houses.
Okay, but housing in general, I think, and I shouldn't say I think, I know housing in general is the greatest wealth builder that this country has had since its inception. I mean, we all strive to be homeowners. As far as investors are concerned, investors is anybody who owns a rental property. So you may have purchased your first home and then you purchased your move-up home and you rented out that first home. That makes you an investor. So congratulations. Anybody who purchases real estate and uses it either for their own personal use or rents it out for income, I think that's a great way to build wealth. I think that real estate should be part of everyone's portfolio. Notice I said part, not whole.
Yep.
Okay, so that's what I think about housing. Todd sent me this article, and I read the article, and then he pulled up the
headline.
The headline when we sat down to do the video, and I'm like, oh, wait a minute, that's not the article I read.
Okay.
And so now we'll find out what article I did read.
So one of the very early sentences in the article is this one. Rented homes were supposed to be the safest nook in the U.S. real estate market. It isn't turning out that way. So, oh my gosh, now we're going to hear about how bad it is to own rental homes. All of you who own rental homes, apparently you've made terrible decisions, especially if you bought them 10 years ago. Now, we're not talking about the phenomenon of I just bought my first rental in January of last year at the highest bubbly peak or whatever, right, at a 5% rate. We're not talking about that. Okay. So we'll move on with the article.
Okay,
this is the next part of the article. Okay. Rising interest rates are taking the air out of bubbly property valuations. Apartment prices are down 21% over the past year, according to Green Street Commercial Property Price Index. These are not rental prices. These are not single-family home prices. They're the prices for apartment buildings.
Okay, so they're not the
Complexes.
prices for apartments. They are prices for the entire apartment complex.
Okay.
So remember, the article starts out leading you to believe that they're going to talk to you about single-family homes, right? But that's not what the article says. So keep going, please.
Okay, this makes them the second worst performing category of real estate after offices, which have lost 25%. Which we know, especially in big cities, big buildings. Institutional investors tend to own fewer individual family homes, where values have been more resilient so far. Like literally this thing, values have been resilient in single family homes. But the previous quote basically said that single family homes were supposed to be the safest nook, and it's not turning out that way. But then they say, oh yeah, single family homes is the safest of all real estate investments. Like literally, this is the Wall Street Journal. Okay, then they put this chart up. This is the change in commercial property values past 12 months. Office, apartment, malls, industrial. Which one of those four single-family homes?
None.
What about strip retail?
Not a single-family home.
Manufactured homes?
Not a single-family home.
Self-storage?
Not a single-family home.
Healthcare?
Not a single-family home.
Like hotels, motels, and lodging?
Not a single-family home.
Actually, it's not even listed on this chart because it wouldn't be a negative number.
Okay. All right.
Okay, next one. Okay, this is the last one, the last slide. That really kind of got me. Buyers paid too much on the basis they would be able to push rents even higher. Instead, rent growth is expected to cool to 4% in 2023, according to new market forecasts, only slightly higher than the 3% long-term average. So the 3% long-term average for rent increases are 3%. This is only going to be, it's cooling. It's going to be less. It's only going to be 4%. It's not going to be 3%. So it cooled up to 4% from what was, I guess someone said it would be more or whatever. There's so much wrong with this article. They literally say single-family homes are bad, single-family homes you shouldn't buy. Look how bad apartments and all these other investments are. Oh yeah, if you bought a single-family home, you're doing pretty good. Oh, and rents are only supposed to be 3% long-term. And this year they're down to only 4%. And it's like everything in this article was literally, and here's my problem with the article is people read stuff like this and then they make decisions based on this. I'm not saying you should go out and buy apartment buildings or malls or stuff like that. If you bought them in the last year or two, they were probably not very good investments if you have to sell them. Obviously, you have to keep them for a long time, right? You don't flip apartment complexes. You buy them and you hold them for a long time.
Right. The point of this tirade
it's a tirade.
Okay, so one, he's not caffeinated, people. This is just him.
No, it's definitely not caffeinated.
He doesn't have high blood pressure. Don't worry, he won't have a heart attack.
Low blood pressure.
But he was very animated, wasn't he?
Oh my God.
Anyway, the point that we're trying to make is go beyond the headline, read the article all the way through. Whatever piece of information you're trying to make decisions on, read all the way through and make sure that you understand what they're actually communicating to you. And if there are contradictions in there, then perhaps you need a different source. I know that this traditionally has been a respected publication. I have lost respect, and I'm sorry to say, for this publication because of articles like this that completely mislead people and have an agenda rather than providing information. And I'm sorry that's the way it is.
Oh, yeah. So here's another thing. They make money for two ways, subscriptions. The more they can make you, tease you to subscribe. I really want to read this article about why housing is the worst investment you could have possibly made ever in the last century, right? I need to read this article. I'm going to pay the Wall Street Journal and buy a monthly subscription, which you put on your credit card and then maybe you forget about and they charge you every month, right? Then, as you read the article, all these ads are popping up all over and they monetize all the ads because they sell the ads to advertisers. They go, hey, we'll put ads on the page. You'll be on 500 articles a day and you only cost you 10 grand or whatever, and your ads can be all over the place. So every time they can say, well, we served up this article and your ad an ad of your whatever got shown. So you owe us, 12 cents or whatever. So they make money all the way. So there's no incentive to be truthful. It's just to suck you in. And literally it is a bait and switch to suck you in and then take you through this. The Crash Bros do the same thing. They give you the worst possible negative news. We did the video where it was basically titled "Why Housing Crash Videos Are so popular," mm-hmm. And you found out why because when you get 90,000 searches a month for housing crash 2023, and you have 1,400 in the U.S. a month for real estate update mm-hmm. or something. That's a bit ridiculous. So that's why they make the videos. That's why they're doing this. And then people make decisions in their life. They just see the headline and go, oh, hey, we were going to buy that house, but I just read the Wall Street Journal. They're a renowned publication. And they said housing's a terrible investment. Let's just rent for the next 5 years.
Right. So what did you think?
No, we're not saying people are going to say it in the comments. And it's funny because someone just said it in the last video. Oh, well, you're saying this is the best time ever to buy a house. No, we've never said you should buy a house now. Ever. We have not said you should buy a house now. Actually, you should buy a house in the fall. That probably is better than now because there'll be more stuff on the market.
Which is funny because we were talking about Todd trying to buy a house now, and somebody put in the comments, wait until the fall. So I thought that was really cute, going, follow your own advice. I thought that was really sweet. So anyway, all the excitement and our downhearted report on the Wall Street Journal. Sorry about that. Please let us know what you thought of the video. Please like the video, subscribe, hit the notification bell, share the video, and leave us some comments. I mean, what do you think about, in all seriousness, what do you think about all these articles and videos and different news reports that basically are trashing housing as a way to suck you in, and then even they can't justify the headline? I'm rather disappointed in the journalism and in those reports. What's your take on it? Please let us know. We'd love to hear from you. You do not have to agree with us. We welcome all opinions, and we'll see you on the next video. Bye.
Bye.